Today, I'm joined by Campbell. He's a financial analyst at Spreadex. Morning to you,
Good
Connor.
morning.
Right, let's kick off with cable in this segment. The headlines: UK manufacturing production on Wednesday, US inflation and retail sales on Friday. What on earth is going on in this currency pair?
No, I think it's a bit difficult now. At least with the euro, you've got the euro looking at what is the ECB going to do next. When are they going to announce that they're winding down the QE plan and stuff like that? With the pound and the dollar, you know, both sort of the Bank of England and the Federal Reserve pulled their triggers, in the second half of last year. So I'm not quite sure. They don't have the same kind of sort of macro arrow really to point to be like, okay, so we're focusing on this for the first 3 or 4 months of 2018. I think you've seen that sort of reflected since the new year began really. Obviously, the pound is still doing well against the dollar, but it has maybe found a cap around that 1.355. They're struggling to really, break away from that level. From our clients' perspective, they're still buying around the 1.355 level. I think they're looking at it and saying the dollar has been weak for a while now, even when the US has had good data and the tax plan success and things like that. The dollar hasn't been particularly receptive to any of that. There's been plenty of opportunities for the dollar to recover some ground, and it hasn't really taken those opportunities up. Looking into this week, UK manufacturing production is meant to be okay. It's meant to rise from 0.1% to 0.3%, so that's sort of that's good for the pound. Heading into Friday, then the US inflation and retail sales figures are probably the biggest figures of the week in terms of this currency pairing. Neither is meant to be great for the dollar. I think inflation is meant to halve from 0.4% to 0.2% month on month. Retail is expected to fall from 0.8% to 0.5%. So, especially heading into the end of the week, you can see that there's maybe a bit more ground for the pound to put a bit of distance between it and the 1.355 market it sort of kept returning to in the last week and a half. And I think that's why we've seen our clients maybe buying around that level, because they're looking towards the end of the week and thinking if the dollar hasn't done anything with good data, then it's not exactly going to do much with two key pieces of data seeing month-on-month declines.
Connor, thank you very much indeed.